Hi, my name is Reid Wilson. The company that I chose was Sturm, Ruger and Company. Sturm, Ruger and Company is an American firearms manufacturer founded by William Ruger in 1938. William Ruger started off the company by producing light machine guns for military use. He partnered with Sturm in 1949, and Sturm gave an initial investment of $50,000. Unfortunately, 2 years later, Sturm passed away. To honor him, he kept his name in the company. But from here on out, I'll just refer to the company as Ruger. William Ruger developed a new casting method that was much more efficient and wasted much less materials, which led to a higher quality of materials and less cost. This method is now used in aerospace, golf, automotive industries today. The Ruger 1022 is a 22 caliber long rifle. The iconic rifle debuted in 1968. This rifle is known for its reliability, durability, and accuracy. A personal connection to this specific gun is my grandpa. He had a 70s model and it still fires perfectly today. So Ruger is known for keeping a long tradition of quality firearms. Ruger also has a shooting team. Their shooting team is one of the best in the world, and their captain is a world champion shooter. The industry of firearms is a booming industry with $50+ per year in economic, or $50 billion per year in economic activity. And this is because Americans love their guns, and more Americans are wanting to buy guns than ever before. The firearm industry used to just be about self-defense and basically survival, like hunting and stuff. But now it has become more of a hobby and a sport, but self-defense and hunting are still a major aspect of the industry. On the self-defense side, handguns are the most popular, but handguns are the most popular guns in America. But Ruger sells more rifles than handguns. This industry is a great industry to start a career in also. The average salaries are over $50,000 per year. The government and gun violence impacts this industry drastically, and I'll elaborate more on that in current events. So let's get right to current events. Current events include increasing regulation and gun violence primarily. Lots of regulation and restrictions have been on handguns and magazines. Handguns, for example, in California, you can only have a bolt action or single shot pistols or handguns. And let's go to the magazine restrictions. So the magazine restrictions in the 90s, there was a ban on assault weapons, and that lasted 10 or so years. And Ruger was actually an advocate for this. And in 1989, he stated that he was not very pro-gun control, but pro-gun control for a gun manufacturer. And he actually didn't produce magazines that were over 10 rounds. And he wanted more restrictions on people that shouldn't have guns, keep them from getting them. Let's move to gun violence. Gun violence is obviously a major problem in America, and people that should not have guns ultimately find a way to get them. This can make people very scared and very timid around guns, especially in the younger generations. Now let's move to more of the financial side of Ruger. For their performance, their performance is fairly strong. Their profit margin being 10.27%, rate of return on total assets 16.54%, and the ROI of 21.73%, which is all fairly strong. However, their performance is down compared to previous years. Let's move to the horizontal and vertical analysis of the income statement. Net sales are down 26,621, or 5.1%. Cost of goods sold down 6,971, or 1.89%. Gross profit down 19,650, or 12.76%. Selling and administrative expense. Selling expense is down 14,121, or 28.68%. Administrative is down 3,852, or 13.57%. Operating income is down 9,340, or 12.23%. Net income is down 1,209, or 2.32%. Overall, they have shown a decrease in economic activity due to the lack of sales. Horizontal and vertical analysis of the balance sheet. Cash and cash equivalents are down 24,995, or 39.37%, which is a big decrease in cash equivalents. In the prior year, in 2018, they paid off a lot of their liabilities with cash. And net inventories are down 8,294, or 20.68%. Total current assets are up 66,405, or 39.22%. Total assets are up 51,214, or 18.01%. Total current liabilities are up 18,514, or 35.15%. The retained earnings are up 29,100, or 9.08%. Total stockholders' equity is up 34,093, or 14.81%. Total liabilities and stockholders' equity are up 51,214, or 18.01%. Now, let's move on to the company comparison. The company that I chose to compare Ruger to was Smith & Wesson. They're also a manufacturer of firearms. They are one of the biggest in America, and they are slightly larger than Ruger. And Ruger is also in the top. Both these companies are in the top 3 firearms manufacturers in the country. So let's start with the net revenue. Ruger had a net revenue of $495,635, and Smith & Wesson had $638,227. Cost of goods sold, $361,277 for Ruger, and $412,048 for Smith & Wesson. And Ruger operated at 67,000, and Smith & Wesson operated at 38,000. Now let's move on to the percentages. So their cost of goods sold for Ruger is 72.89%, gross profit 27.11%, selling expense 7.08%, administrative expense 6.51%. And their operating income is 13.52%. Now for Smith & Wesson, their cost of goods sold is 64.56%, gross profit 35.44%. Their selling expense 8.97%, administrative expense 16.87%, and other 3.67%. Operating income at 5.96%. So Smith & Wesson has more net revenue and net sales than Ruger, but their expenses are much higher, which makes Ruger more profitable and have a higher operating income. Let's move to Ruger's financial ratios. So Ruger has a very strong ability to pay off their current liabilities. With that being said, their cash ratio is 0.54, which is fairly average, but it would be better if they got it up closer to 1 so they had a better ability to pay off current liabilities with cash if needed to. Their acid test was 2.78, which is very strong. Current ratio of 3.26%. Their ability to sell merchandise and collect receivables. Their inventory turnover is 4.3, which is good. Days sales and inventory, 84.81, which means that it takes them about 85 days to sell all their inventory. Their gross profit percentage is 27.11%, which is a fairly strong gross profit percentage. And their accounts receivable turnover ratio is 11.01, and days in sales receivable is 33.15, which is fairly strong. It means that it only takes, on average, 33.15 days to collect all of their receivables. Their ability to pay off long-term debt is also fairly strong, with a debt ratio of 2.13. Debt to equity is 20.27%, which is very strong. And their times interest earned is 258.97. Now for evaluating their profitability, like I said earlier, their profit margin is 10.27%. Rate of return on total assets is 16.54%. Now their asset turnover is 1.6, and their earnings per share is 2.88, which are all fairly strong. Let's move to their stock performance. Their stock performance has been fairly rocky, lots of up and downs, not too much steady increase. But between 2010 and 2014, it was on an increase, but there was a big dip in 2012, but it quickly started rising back up. In late 2013, there was a major jump in the stock price, which ultimately led it to drop drastically in 2014 and continue to drop until 2015. And since 2015, there's been lots of up and downs, big spikes, but the stock price has not gone below about $47 per share. Now I'm going to give some recommendations about this company. Ruger does need to increase their sales to get back on track to where they were a few years ago. Possibly new marketing strategies, or just like coming up with new firearms, or just they need to get creative and make new sales, because there are so many gun manufacturers out there that produce very quality guns. Very strong industry. But with that being said, they're still a very strong company financially. Their ratios are very strong. The company has great returns, great ROI, great profitability. I would say that this company is mildly risky to invest in, solely because their stock prices have gone up and down a lot, but they tend to increase a little bit, but they have lots of dips along the way. So I would just ride it out and see where it takes me. But personally, I would invest in this company because, for one, there are becoming stricter gun laws, which seems counterintuitive, but this increases sales. This is because people think that they won't be able to buy guns anymore and make rational decisions and go out and buy a bunch of guns. Also, Ruger is in the top 3 gun manufacturers in the country. So they're not going away anytime soon. If something bad really happens, they will be able to make it through and they will be okay. Thank you. That is my presentation.